Hey there, everybody. It's Jeffrey Dundon with Safe Option Strategies. Welcome to another episode of Moving Markets. Glad to have you here. It is Thursday, the 25th of January, 2024. U.S. stock market has been closed now for just a little over an hour. We're going to talk a little bit about what happened in today's market movement. Have to talk a little bit about not only, we talked about Tesla's results a little bit last night. We'll talk about the movement on Tesla today. More importantly, the finish that was had with the Dow Jones Industrial Average, the S&P 500, the NASDAQ. We're back into another pretty bullish run, another leg of a rally. And I keep asking myself, how long is it going to last? I'm going to talk a little bit about that in this episode. I'm going to throw out a teaser right now. Tomorrow, make sure you tune in tomorrow. Now, last week, I got the podcast on Friday to drop a little bit later on Friday afternoon, evening than I wanted to. I'm going to try and do a little bit better with that tomorrow. Try and get it out and posted within a couple of hours after the market closes. But I'm going to take some time after this morning's GDP report, which was considerably better, I think, than what a lot of people were expecting and anticipating. And that had a lot to do with the market's rally today. Tomorrow we get PCE numbers before the market comes out. And by the time I'm doing the podcast tomorrow, I'll have had a chance to digest those numbers, tell you a little bit about them and kind of what to expect in the coming weeks. But I'm going to throw out this little teaser. I am going to give you some pretty heavy thoughts on the macroeconomy, the fundamentals of the macroeconomy, what is driving it, what some of the danger signs are. We're definitely in a good mode right now in terms of some growth and some positive things going on. I'm not going to take away from those positive things that are going on at all, or I'm not going to try and be the boogeyman and scare you away. But I am going to tell you about some of the warning signs that you need to be watching for and things you need to be looking out for, some of the numbers behind the numbers. We're going to have a serious conversation tomorrow about inflation, about inflationary data, what is going to happen, or what I think is going to happen in the near future with inflation. A couple of things to, like I said, be cautious about, be prepared for, and most important, how to make money off it. If I'm right or if I'm wrong, there's ways you can profit and make money off of what's going on in the economy, or if the economy turns and things change, which I'm still of the opinion that it's going to do. So make sure after today's presentation, enjoy it. It's not going to be a real long one today. Tomorrow it's going to be a little lengthier, maybe 30 plus minutes, and we're going to have some serious conversation about inflation data. So make sure you tune in, not just tomorrow, not just, I'm glad you're tuning into this one, but make sure you tune in every day. Enjoy the rest of the presentation. All right, so at the close of the day today, we had historic all-time closes on the Dow. Closing over 38,000, I believe, for the very first time. It got over 38,000 a couple of days ago, but this is the first time it's closed over 38,000. The S&P, I think this is a fifth or sixth day in a row that they have closed at or near a new all-time high. And the NASDAQ had an okay day, but after starting really, really strong today, the NASDAQ sold off and actually went negative for a little while, maybe mid-morning, and then managed to get back into positive territory and stay in positive territory for most of the day. But the NASDAQ struggled a little bit, and Tesla was a large part of that. Tesla helped bring them down. If we look at the one-day intraday chart for today, you can see that the NASDAQ started and was riding pretty high. When I say mid-morning, this is Eastern time. That would have been around 10:30 my time. So sometime between 10 and 10:30 my time is when they started to slide, and they briefly went negative and then managed to go back into positive territory before the day was over. And NASDAQ futures are down as well as Dow and S&P futures for tomorrow. We'll see what actually happens. The news that generated the big jump in the markets this morning, right when they opened, was primarily a GDP number that was much better than people expected. We've been talking about this all week long. Watch for what this GDP report comes out at. We were, obviously 3.3% GDP is down from the almost 5% in the prior quarter, but the estimate was 2%, and it came in at 3.3. That's a big beat. I mean, that really beat the estimate by a significant margin. And look, hats off to the current administration for this kind of a GDP number. But tomorrow, I gave a little bit of a teaser in the moving markets intro that's for everybody. The In the teaser, I said tomorrow after we get the PCE numbers, I'm going to talk a little bit in detail about inflation and some of the numbers behind the numbers in inflation, and we're going to talk a little bit about some of these numbers behind the numbers in this GDP. While this is a good number, everyone that loves the country and loves the economy of this country, even if you're in a different country but you love profiting off the US economy, you've got to be a little bit concerned with the biggest portion of this positive GDP number is government spending. And that is not a sustainable, tenable situation. And I'm going to talk more about that tomorrow. Make sure you turn into tomorrow's podcast as we're going to go into some detail on that. But great day in the market, historic day in the market, and maybe futures are down right now. Dow futures down a little bit, NASDAQ futures down, S&P futures down. Some of this is on Intel's guidance. That's going to be, I told you many times over the last couple of weeks, that one of the concerns as we go through this earnings period is not going to be whether or not companies hit their earnings results and get the results that they're looking for. It's going to be more about how they guide moving forward. And we saw that with Intel's numbers. Now, I don't trade Intel actively. It's never been a company that I've held in my portfolio, but you have to pay attention to Intel. It's a long time, big US company. Intel is something, like I said, you got to pay attention to it. It's sometimes indicative of what other things in the tech sector are going to do and what's going to happen. The headline right now on CNBC at least is, you had Alphabet, which is basically Google, Microsoft, Facebook, all closing at all-time highs, and they all report earnings next week. And right now, more so than just Intel being a big enough company by itself to move the entire market, it's what is this story about Intel? What, if any, insight does that give us into these three behemoth companies, any one of which could move the markets dramatically one way or the other? If Google comes in with phenomenal numbers, but a really disappointing guidance statement and expresses some of the same concerns that Intel is expressing, that could cause the markets to sell off in a big way tomorrow. Same thing with Microsoft, same thing with Facebook. It could cause that. If they have good numbers and a positive outlook, a positive guidance report, a lot of that's going to depend on if they're starting to actually see profits produced from all of the AI build out and infrastructure and promoting that they've done. And all three of these companies are going to be on the hook for that. So next week's going to be incredibly interesting. There's an underlying story kind of behind the main mover of the market today. And that is, I want you to look at these three, maybe it's only two now. There were three headlines, and now I'm only seeing one of them, or two of them, sorry. We already mentioned Levi cutting 10% of its global workforce. Microsoft announced 1,900 layoffs just a little while ago, and I'm not seeing it now. And I'm sorry, I'm forgetting the company. There was another company, it might have been Google, that even though they closed at all-time highs today, I think Google announced some more layoffs as well. I might be wrong on which company it was, but there was another big company that was announcing some layoffs coming. We have talked so many times in the last few months about, in spite of some of the headwinds in the economy, in spite of some of the macro picture in the economy, there are some, really positive job numbers, really low unemployment numbers, job growth, strong jobs market. And that has been largely responsible, maybe not 100%, but largely responsible for propping these markets up in the face of inflation and some other, major economic concerns. I am suspect of the jobs numbers. Every week when those numbers are released, I'm a little bit suspect of them because you keep hearing about big companies laying people off.
And you have to start wondering, are we getting accurate numbers? There was a story a week ago about the first quarter of last year, a revision of almost 500,000 jobs. And it was a revision to the downside. And that's either someone intentionally playing with the numbers, or that's some major, major incompetence on the part of the people putting together the numbers. And I think it could be a little bit of both. So, you've got a situation where the jobs market has been strong, but you've got to wonder, how much longer is that going to be the case? And are we really getting the accurate picture? So we might include that in part of what we talk about as well tomorrow. Make sure you tune in tomorrow to the podcast. I'm going to try and drop it within about 1 hour, maybe an hour and a half after the markets close tomorrow. I am going to talk a lot more about inflation, and I'm going to have a lot more information when we see the actual report tomorrow on the personal income and outlays, what's basically called the PCE index. We're going to have a better picture of how sticky inflation is and how long it may continue to be sticky. That's going to be an interesting report, and especially in light of how well the GDP report came in tomorrow, or to this morning, I mean. So make sure you tune in and be a part of that tomorrow as we talk about inflation. We talk about some of the macro economy headwinds that, in spite of this little rally, things that I believe are still going to probably tip this market to the downside very soon. We may end up seeing a little bit of that tomorrow. And I'm not giving up yet my prediction that by the end of fourth quarter, we have a pattern that looks more like this than this little rally and bump we've gotten through January. I think you're going to start seeing this through the end of March and maybe into the first part of April until the next earnings season starts. So we'll see if I'm right or not. I'm going to wrap up right there. Have a great rest of your evening. Have a great day on Friday, and make sure you tune into the podcast tomorrow, a couple hours after the market closes. Thanks, everyone. Bye-bye.
That wraps up another episode of Moving Markets, the Safe Option Strategies podcast. Thank you again for joining us today. I hope you found this information informative, if I can say it that way. I hope you enjoyed the presentation. Make sure you come back tomorrow. One more teaser. You got to check out tomorrow's episode when it drops. We're gonna have a lot of conversation about inflation and inflationary data, and what effect it's going to continue to have on the market, or at least what we're going to predict it's going to do to the market. As always, make sure you take a minute. If you like this presentation, if you like anything about it, if you want to get the trade results that we're getting, if you want to profit the way we are profiting in the market, which is absolutely phenomenal, make sure you go to sostrades.com, check out some of our membership packages, check out how to be involved with us on a more formal basis, and be able to take advantage of the results that we're getting. That's the most important thing. Check us out every day that the market is open for this podcast, which is always free of charge. We'd love to have you subscribe. We'd love to have you make comments if you would. And if you're watching on something other than YouTube, make sure you like it or follow it. We would love to have you back each and every day. In the meantime, thanks, and have a great rest of your day. Bye-bye.